I'm Charlotte McLeod with investingnews.com, and here today with me is Juan Carlos Artigas, Global Head of Research at the World Gold Council. Thank you so much for being here. Great to have you.
Thank you so much for having me today.
Really good to be speaking with you, and we've got a lot to get into today because the World Gold Council just released its 2025 Outlook Report. I thought before we start looking ahead to next year, we can do a brief look back at 2024. It was a pretty interesting year, so I'm curious to know if there were any surprises for you, things that stood out for you that you would really take away from this past year for investors.
Well, absolutely. I think that one of the key things that has caught investors' attention is how strong has gold performance has been this year. So gold is up nearly 30% year to date, and it actually outperformed many asset classes throughout the year. And the interesting thing is that it did so in spite of the fact that interest rates remain relatively high still, and especially towards the end of the year, the dollar is strengthened, right? So when you look at gold's performance in this context, oftentimes it elicits questions from investors that tend to focus primarily on those two things, interest rates and the dollar, to understand gold's performance. And gold's performance really goes beyond that. And I'll be happy to talk to you more about that.
Yeah, I think just before we turn the camera on, you're speaking about gold's dual nature and how important it is for investors to be aware of all the components behind gold. So maybe we go into that a little bit before we move on and look more deeply at 2025.
That's correct. So gold demand has three primary components. The first one is consumer demand, and that is primarily through jewelry and technology. Then there's investment demand that is typically linked to either individual investors or institutions. And then finally, central bank demand. So when we talk about the gold's dual nature, we talk about the fact that consumer demand is going to respond primarily to drivers such as economic growth, or, for example, also respond to the price of gold as any consumer good or normal and luxury good responds to. On the flip side, investment demand responds to more financial-driven variables such as interest rates or risk, and it tends to actually feed positively from price trajectory. And this dual nature makes gold very interesting, very robust, and it also explains how it performs both in periods of good economic growth, but also how it tends to perform quite well in periods of risk.
Trump's presidency is definitely going to be an important factor for investors to watch in 2025. There's already questions about whether he's going to be good for business and the economy, or if his policies are going to be inflationary. What is the World Gold Council going to be watching most closely when it comes to Trump and gold?
I think that is what is interesting for the gold market in general, is that it's a global market. So while there's definitely an important component that comes from the US economy, and whichever economic, fiscal, and monetary policies the Trump administration may bring, they will still play in the context of a global market. And for gold, different investors of different regions may respond as well, not only to the global dynamics, but to their local environments. Now, I think that the key component here, the key thing to keep an eye on is that the second term for President Trump will likely bring uncertainty for investors, especially globally, in terms of the actual policies they will implement and what their effect will be. Not only their intended effect, but also the actual effect that they may bring, because sometimes policies are intended to have one effect, and they may, investors and consumers may react differently. And that level of uncertainty, I think, that is, keeping investors very much attuned at what may happen. We do think that at the beginning, very likely, investors will continue with their risk-on appetite. We've seen flows into the equity market, and especially in, for many U.S. companies, that has been positive, and there's, good positive sentiment towards that. Now, again, the question will be, once various policies start to get implemented, how will they translate to the real economy, and whether that may bring inflation, or whether any tariffs that may actually be implemented could disrupt trade. And all of these are unknowns. We don't know exactly what will happen, but we do think that gold remains top of mind for many investors as means to hedge overall risk in the global economy.
Definitely. I think that makes a lot of sense. And one question that I've been asking a lot of people as we prepare for Trump's second term is whether we can look back at his first term as a blueprint for what could happen in terms of what he does and how that impacts gold. And it sounds like a lot of the answers I've been getting are not really, but what are your thoughts on that question?
Yeah, I think that again, there's a lot of uncertainty exactly on how things will play out. There are a lot of learnings from the Trump administration into their first term, or his first term, and how that translates into policy. But there's also a very different landscape at present that when he first took office back in 2016, right? What I can tell you, though, is that gold did perform well under the Trump administration pre and post-COVID. So it was not only the COVID effect that was global and completely independent to a degree of many of the policies that had happened before, but just generally, I think that there was a good performance for gold even in the first couple of years of his presidency. Partly, as I mentioned earlier, because gold is truly a global asset. So it's not just what happens in the US that matters. In fact, actually, for example, for Canadian investors, oftentimes their reaction and their decisions are going to be made based on how they feel local inflation may play out, or the strength of the Canadian dollar and the state of the economy, right? So, and gold as a global market is really the sum of the decisions of global investors and consumers.
Okay. Thank you for going into that. I do find it pretty interesting. So let's go beyond the US and take a look over at China. So China played a major role in driving the gold price in the first half of 2024. This is something that the World Gold Council's report takes a look at. So how is Chinese demand for gold shaping up as we look forward to 2025, particularly as the country is facing some challenges internally with its economy, and as we have these tariff threats coming from the US?
Right. So look, from the Chinese market, in particular, from an individual perspective, demand is more or less 60% jewelry and about 40% investment, broadly speaking, right? And these two parts of the market are going to behave somewhat differently. The jewelry side, in particular, is going to respond to economic growth and to prices, specifically as economic growth increases, or if economic growth is stronger, then there's more support for jewelry demand. And if it's weaker, it tends to create headwinds. Now, price is the opposite. As price increases, that tends to create headwinds for gold demand, and vice versa, right? So what is happening as we look forward? Well, on the one hand, there's a question about economic growth and how strong or not it will be next year. And that's something that we're monitoring very, very closely, because it can have an effect, of course, in the strength of Chinese demand. I think that one of the positive aspects, though, is that the gold price has started to stabilize a little bit more after increasing very consistently for most of the year. And when you have a little bit more of a stable gold price, that can be a bit more supportive of consumer demand. But it will really depend on, the effect, for example, of some of the stimulus that the Chinese government has implemented or may implement, depending on, how global trade shapes up. Now, on the investment side, we have seen fairly consistent interest from investors of using gold to hedge risk, and that risk is not necessarily going away anytime soon. So that may actually create a little bit of a counterbalance and soften any potential weakness we may see on the consumer side, even though, as I mentioned earlier, generally speaking, the jewelry side of demand is slightly larger than the investment side.
Okay, and keeping on that global outlook for gold in 2025, what other regions are you going to be watching most carefully when it comes to demand next year?
Well, Western investors were definitely also keeping an eye on and monitoring because, interestingly enough, even though the gold price this year broke uh, record highs about 40 times, year to date, and as we were discussing earlier, it has performed quite well. Uh, in previous occasions, when the gold price has increased so strongly, it has usually been accompanied by Western investment flows, in particular through gold-backed ETFs, which we haven't seen as much this year. We have seen some where we saw some in the third quarter, but they were not necessarily as widespread as in previous occasions, right? And which basically means that the market, the Western market, the Western investment market is not saturated, right? So if there's a trigger like significantly lower interest rates or an increase in risk, we may start to see some of those flows come in with more force, which in turn will likely be supportive of gold. But again, there are different conditions that may be needed to kind of create those specific dynamics of lower interest rates or higher volatility, and that's why we're keeping an eye on them, right? But Western investors can actually could provide quite a bit of support for gold given the right conditions. India, where it's also an important market. The Indian market actually was quite robust this year, in part due to a reduction in import duties that happened in the second half of the year, and that had a positive effect on both consumer and investment demand. And actually, gold investment in India has been gaining some momentum, even though it's a smaller portion of the market. So, but we're keeping an eye on India for sure. And then finally, not necessarily, and this is highlighting a couple of markets. As I mentioned, gold is global. The Middle East matters, Southeast Asia, the US and Europe through Western investors, as I mentioned, right? But in addition to the regions, we're also keeping a close eye at what central banks are doing. Central banks have been an important component of demand for the past couple of years and have provided quite a bit of support for the gold price. They reached record demand in both 2022 and 2023. And even though this year it may not break those previous records, it is still quite strong and well above average. So as we look into 2025, we still believe that central bank demand will remain robust and that will remain above average. And as long as it remains above average, that can still provide additional support for gold's performance.
In terms of the central banks, I think investors who are following the sector will know that's been a big support for the price in recent years. Any front runner countries that you see emerging in 2025?
The most important thing for central banks is that it's a very widespread phenomenon. That is not just one or two central banks, but actually you can see the contribution of many central banks throughout, the past decade or so. In fact, even though investors have been paying a lot of attention to what central banks have been doing over the past 2 or 3 years, the reality is that central banks have been net buyers of gold for almost 15 years now. Right, and it's really a combination of various emerging markets from Asia, from Latin America, from other parts of the world as well. And even in recent years, we have started to see even developed market central banks contribute to this trend. We conduct an annual survey where we ask central bankers for some of the key reasons why they add gold and what their expectations are about the next 12 months and so on and so forth. And very consistently, we continue to see responses like the value that gold brings as a diversifier, or the way that it performs in periods of crisis, as reasons why they continue to add gold to their reserves. And in fact, 80% of the central banks we surveyed responded that they expected overall central bank reserves to increase over the next year. When we ask in April, we ask again to another subset of central banks in October in a forum we hold, and we saw a very similar response. So I think a very consistent trend we see from them. So and I think that makes it robust, right? Because if you were over reliant on a single central bank, then that could create more challenges. But because you have the contribution of many, then you tend to see these strong numbers come out.
Right. So again, important to keep that wider picture in mind. And I am going to hone in on what's going on with the Fed, just because you had mentioned interest rates a little bit earlier. So we do still have one Fed meeting left for this year, later this week. And the very broad consensus is that we're going to get another 25 basis point cut to end the year. Is there any reason to think that we would get a surprise, or any commentary you would add there?
Generally speaking, I think that the Fed tries not to necessarily surprise the market unless it's very necessary, right? And the way that they do that is that they telegraph, or they provide guidance prior to meetings. Like, they start to be very explicit, or start to create perceptions that they may not necessarily move in one way or another ahead of a meeting, because obviously the Fed doesn't necessarily want kind of like volatility in the market. So, I would say that the most important thing here is, generally speaking, markets are expecting overall another 100 basis points or so between now and the end of 2025. And that's where consensus lies, right? So, this is where the 2025 will become quite interesting, as to whether the Fed and other central banks need to go beyond what is currently expected, given, the financial conditions, or whether they need to slow down a bit, depending on how perhaps the inflation picture plays out.
Yeah, I think in the World Gold Council report, it puts it quite nicely when it comes to the Fed talking about walking a tightrope, trying to engineer that soft landing. So it's been more successful than I think many people expected so far. Anything you would add on that tightrope for the Fed in 2025?
The one thing that I would add is that, again, historically speaking, gold has tended to perform well in cycles where the Fed is easing. So it has increased on average about 6% in the first 6 months since the cycle begins. And the extent of, or the continuation of that performance is, of course, linked to how deep or how long the Fed cut cycle, will be. So overall, even though, as I mentioned at the beginning of our conversation, that we look at gold very holistically through the lens of a global picture and a combination of drivers, not just one, it is still important to understand that US monetary policy has an effect not just in the US economy, but has ramifications around the world. And that's why it is important to, for us to keep an eye on what happens on that front.
Makes a lot of sense. And another gold price driver that I wanted to make sure to bring up is the geopolitical angle. So typically when I talk about this with different people, I hear that geopolitical turmoil tends to have a short-term impact on the gold price if there's a big event, but it doesn't have that long-term lasting effect. We've got all of these different hot points going on in the world right now. I'm sure that will continue into 2025. Anything that you would want investors to be aware of on that note?
Yeah, look, I would say that gold geopolitical risk has both a direct and an indirect effect on gold prices. So if the geopolitical risk is very, very short-lived, then yes, then probably you can still see a spike that may revert back, right? But what has happened actually with the world right now is that geopolitical risk has generally increased over the past couple of years. And I don't say this just in terms of our sentiment. You can look at indices such as the Geopolitical Risk Index, that is a widely followed index that assesses and measures geopolitical risk. And you can see a structural shift between the levels seen, prior to 2022 and what we have seen since, right? Which basically means that overall the level of risk and concern, for investors is also higher, right? So that starts to weigh in. And we have been, seeing these as part of, one of the drivers that explains gold's performance. So, again, primary effect or direct effect that you can see through geopolitical risk when an action or an event or an invention or a statement happens. But also, eventually, if those continue for longer, they start to have an effect on the economy, on trade, and other variables. And that's the secondary effect that kicks in because gold is going to respond to that, right? So the more widespread or the more, the longer a conflict lasts, the more widespread different conflicts start to become, the more likely you will continue to see a reaction in gold through geopolitical risk.
Okay, thank you for going into that one. And on that note, so black swan events, these are inherently unknowable and really impossible to look forward to. But anything on your mind on that note that you're watching heading into the new year?
So look, as you said, black swans are inherently impossible to predict. What I can tell you is that their frequency has increased. So you do not know necessarily exactly what will happen. What we do know is that we continue to see more and more of those, right, over the past several years, which again, in turn, creates this perspective amongst investors, especially in a very interconnected financial system, that when something starts to unravel, it not only affects one sector, but it starts to have ramifications. And we've seen that happen in the past, right? So that is, I think, that the main concern from investors, not only, perhaps that you cannot necessarily forecast exactly black swan, but that when they happen, they tend to spiral up fairly fast.
I think that's a great answer to that question, just highlighting the increasing frequency. All right, as we're getting to the end here, I know that the World Gold Council doesn't make price predictions, but anything you can say on the direction of the gold price next year, given all of these factors that we've gone over?
Yeah, so we don't provide a direct price forecast, but I think that we've created something for investors that is very useful, which is a tool that is called Quorum, and that lives on our website gold.hub and is available for anyone who wants to access it. And it marries various macroeconomic scenarios to how gold may perform under those conditions by using, the historical relationship between, for example, consumer demand and GDP or price, or investment demand and interest rates and risk, and so on and so forth. So all of these very intuitive variables, we create a very comprehensive view. So we've built some of those scenarios based on external inputs, either from consensus expectations or from other think tanks like Oxford Economics, right? And explain how gold may perform under those. Generally speaking, consensus expectations, if you plug in or if you take consensus expectations at face value, those imply a more stable gold price for 2025. As we were discussing before, consensus expectations not always happens exactly as planned. And this is where various scenarios are interesting also to analyze. If interest rates and monetary policy were to go a bit further and interest rates to fall more, or if we start to see more geopolitical risk or financial market risk come up, that may provide support for gold beyond what we are seeing now priced in. And conversely, if we may see a more significant deceleration, for example, on the economy part, that may be accompanied by higher interest rates, that could have a more challenging, or create a more challenging environment for gold as opportunity cost increases. But as we were discussing before, economic growth may have an effect on consumer demand.
Okay, well, I'll leave a link to that in the video description so people can take a look if they want to find out how to use it. Any final thoughts that you would leave us with as we head into the new year?
Just to highlight again, the important role that gold can play in portfolios as a diversifier, as a source of return, as a very liquid asset that can allow investors and empower investors to have a very diverse and well-protected portfolio. And again, the fact that gold continues to perhaps surprise many investors in its really useful role in terms of robust investment strategies.
Okay, I think that's a really strong note to end on. So thank you so much for coming on to review gold in 2024, outlook for 2025. Really good to have you and hope to do it again in 2025.
Thank you so much for having me again.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is JC Artigas with the World Gold Council.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.